This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, this is Matt Connor with Connor Management Group, and this week we're going to look at the best technology stock to buy right now. Today is Tuesday, November 25th, 2014, and here on the opening slide we see that this company is in the printed circuit boards industry, and we see its 6-month upside potential at 31.5%. Going on to the second slide, we see that the name of this company is called Celestica Incorporated, which is a new one to me. I wasn't aware of this company. Their ticker symbol is CLS. Once again, they are in the printed circuit boards industry, and their 6-month upside potential we see as 31.5%. On to the quick facts slide. Here's the business summary description for Celestica. Celestica Incorporated is a leading global electronics manufacturing services company. It provides a wide variety of products and services, including design, prototyping, assembly, testing, product assurance, supply chain management, worldwide distribution, and after-sales support. Celestica markets its services to original equipment manufacturers, including Sun Microsystems, Microsoft, Alcatel-Lucent, among others. The client breakdown is 6% of the 2013 sales were to consumer end market, 42% of their sales were to the communications industry, 13% were for servers, and storage was 14%. The remainder, 25%, is just listed as other. Let's see. Their website is www.celestica.com. That's CELESTICA, Celestica.com. The company is headquartered in Toronto, Canada. They were founded in 1996. The number of employees they have stand at 22,600. Once again, the ticker symbol is CLS. The sector they operate within is technology, and the industry they operate within is printed circuit boards. A quick note. Basically, in October 1996, Celestica was acquired from IBM by an investor group led by Onyx Corporation and Celestica Management. In July 1998, Celestica completed its IPO. So the company was founded in 1996, bought from IBM, and then it IPO'd 2 years later. So that's part of the reason why it's not necessarily a household name, in addition to kind of operating in a not so widely talked about industry. But back to the quick facts slide. The annual revenue for Celestica over the last 12 months was $5.6 billion. The net income over the last 12 months was $135 million. The cash from operations was $198 million. So this is still a sizable company, not as large as some of the other recent ones we've looked at, and its market capitalization is at $1.9 billion. So technically this is a small cap stock as well. With that, the small cap stock threshold kind of unofficially is at $2 billion. On to the products and services slide. The Celestica website really didn't have too many photos, and there weren't any photos within any investor reports. So what we have here are some excerpts from the website. So we've got the Celestica logo. We've got a box that says at a glance, basically describing their 2013 revenues of $5.8 billion, saying they're headquartered in Toronto, Canada. They have about 20 manufacturing and design facilities worldwide, and the name of their president and CEO is Craig Mulhauser. I think I pronounced that right. The markets that they serve: aerospace and defense, capital equipment, communications, consumer, enterprise computing, health technology, industrial, and renewable energy. They have another box stating what we do. They have a description of design services. They have a few bullets below: manufacturing and systems integration services. Some of the bullet points they have here are NPI, PCA, systems assembly, automated manufacturing services. Additionally, microelectronics aftermarket services, fulfillment services, returns, prevention services, product data management solutions, engineering services, which include product development, test development services, assembly technology services, quality and reliability services. They also have something called green services, precision machining, and supply chain management services. So although they're generally described as a printed circuit board industry, when you spend some time on their website, it's clear that they do a lot of value-added services related to the scheduling of product and the design of products as well. Going on to the metrics slide. Once again, the annual revenue of the last 12 months for Celestica was $5.6 billion. The net income was $135 million, and the cash from operations was $198 million. The operating margins for Celestica are somewhat thin, but for manufacturing operations, this actually does not raise an eyebrow. So the operating margins for 2013 were 4.7%. And the operating margins for 2014 are tracking to be 5.0%. As mentioned, these are quite thin operating margins. On to the valuation metrics. The trailing PE ratio for Celestica right now stands at 14.9, and the forward PE ratio for Celestica stands at 9.2. And that implies that analysts expect earnings to increase significantly. That's a quite of a percentage change from 14.9 to 9.2. Looking at some of the other valuation metrics, the PEG ratio is at 1.1, and whenever you have something around 1 or lower, that's usually seen as a value opportunity. Price to sales ratio is also quite low at 0.3, and the price to book ratio is definitely not expensive at 1.3. So those last few metrics definitely imply that this is a value stock opportunity. The enterprise value to EBITDA ratio is at 6.2. The recent closing price for Celestica was $10.88. The 52-week low for the stock was $9.05, and the 52-week high for the stock was $13.01. The 20-day moving average is now $10.95. The 50-day moving average is at $10.42. 200-day moving average is at $10.89. So usually when you have moving averages that are that tight across those different moving number of days, it implies that not much has changed recently. The average daily trading volume for Celestica actually is low. This is probably one of the lowest daily volume stocks we've covered. It stands at 204,000 shares per day. Usually we have a cutoff of around covering stocks around 300,000 shares per day, but Celestica looks like a great opportunity, and you can still make some in our opinion, safe investments with stocks that have a daily trading volume as low as 200,000 shares per day. The beta for the stock is at 1.4. That means the stock is a little more volatile in the market. When the market goes up, it tends to go up a little more. When the market goes down, it tends to go down a little more. And the dividend yield is 0%. Celestica doesn't pay a dividend, and the annual dividend payout ratio is also therefore 0%. Onto the price chart for Celestica. Over the last 12 months, Celestica is up 10%. The stock started out the year around $10. It dipped down to as low as $9 in February of this year, and it went through a fast and steady ascent from that $9 all the way up to the $13 level in late June, early July. And so with $9 in early February up to $13 in late June, and from there the stock started to pull back somewhat rapidly down from the $13 levels down to around $10.50, held around there, and then again until late October it dropped down to around $9.50, and now it is where it's now trading around just below $11, for argument's sake. So we looked through the headlines and we couldn't find much of an explanation for the reason for the pullback from the $13 level, but from everything we could tell, it was probably just considered to be overvalued. Going from 9 to 13, that's a significant rapid increase, percentage change, and at $13 level, at the $13 level, we're quite sure back at the end of June this would have been considered somewhat overvalued. So there's probably just profit taking, and people sold the stock off. Onto the summary slide. The financial statement quality for Celestica we rate as good. I mean, the great thing about Celestica is that it has zero debt. The reason why the financial statement quality isn't probably considered greater is just that its operating margins are somewhat thin. I mean, at 4 or 5%, you don't have a lot of cushion to be off too much. But still, they have solid financial statements, and they have a decent amount of cash. I mean, they've got $500 million on their balance sheet, so they're not hurting for cash at all. The price pattern trend, as we mentioned, it's increasing. The stock's increased about 10% over the past year, and the operating margin trend, as we mentioned, is flat. It's around 5%. And our overall market outlook right now is still somewhat neutral. I mean, we're not seeing too many bullish names or too many bearish names, so we don't think our outlook for Celestica is going to be supported or harmed one way or the other because of general market conditions. So the recent closing price for Celestica was $10.88, and our 6-month price target is $14.31. That gives the stock a 31.5% appreciation potential. And so it's for all these reasons that we believe that Celestica is the best technology stock to buy right now. We hope you found this presentation helpful, and we'll talk to you soon. Take care. Hi, this is Matthew Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate a thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why the stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that, I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So, hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Content Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com, or you can go to our website and you can see a presentation that compares kind of management groups side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that the technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size was probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, let's see. Additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience. And there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters. Both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to CMG stockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.